the second lesson now. So, what are we going to touch on now? Where to look for proper support and resistance levels, right? So, let's quickly go to the charts. In the previous video, we did discuss that how support and resistance levels are formed. So right now we're going to talk about where they are formed, because there are so many areas in the market whereby support and resistance levels can be formed, but it may not be where you should look for them, right? And I'm not saying that it may not work with you using those certain areas, but it's more efficient for you to use them in areas where it's going to work better, right? So fine, let's start. As you remember on the previous video, did I start recording though? I'm not really sure. Yeah, I think so. Yeah, it is recording. So as I did discuss on the previous video, I did mention that an area of support is where you get a cell, right? Where is that? This one is white. This one is white. Where you get a cell. My cell is black, right? Where you get a cell, and then after that you get a buy. Come on, man. How do you copy, man? It doesn't want to copy. It could have been the network, but anyway. Where you get a sell and then a buy, right? Now, this previous candle right here, this one, right, is the one where you're going to mark your area of support. If the market opened here on this buy candle and then it closed above here, this is where you're going to mark your area of support, right? Or even if it does something like this, you're still going to mark it as an area of support. And same thing for the resistance. You get a buy and then a sell, right? That's just a small revision so that we can be able to get to everything very, very quick. So you get a buy and then a sell. Your area of resistance is going to be at the first candle's close, right? Even if the market does this, or even if it does this, but you can study how which one of these works for you, but preferably this is how you're going to find it. Like most of the time, this is how you're going to find it. And then we then spoke about the open close where you get a buy and then another buy, right? You're gonna mark your area of support at the first candle's close, right? Just mark it up like that. The first candle's close. And then same thing with this one, where you get a sell and then a sell, right? Your area of support is here, area of resistance is here, right? Meaning what? Meaning that when price is in an uptrend, you're going to expect a continuation from here. When price is in a downtrend, you're going to expect a continuation of a sell from this area, right? So let me show you another scenario which I think I didn't talk about with you, right? And I think this is going to be very relevant for this video, right? Let's say, for example, before we get to the main part of the video, because I'm going to be talking using this live chart. So we have a buy and then we have a sell, right? What does this create? An area of resistance, right? Let me just mark it up like this. This is an area of resistance right here, right here. And then the market sells off, right? Another area of resistance right here. So if this is a higher time frame, the first area that you're going to observe is this one, right? But I'm also going to show you how to know whether you should avoid using this area, because it's something which I did experience last week, which was a good thing that I did take a loss on that trade, because it allowed me to be able to know when to be flexible with my areas, right? But ideally, you want to start with the first area that you're going to encounter when you're going to look for a trade, right? If this is happening, right after stop hunt. Let's say you had a stop hunt right here, and then price creates an area of resistance and then sells off without first coming back here. Then you're gonna first attempt to use this area for a sell, right? Let's go to the charts. You'll see it way better than me showing it to you right now. Fine. Where does an area of resistance or support form? It happens after a stop hunt, right? Stop hunt right here. We have a high, traded above it, and then once this candle close, what do you anticipate? A bearish candle, right? Obviously, if there's no bearish candle, there'll be a bullish candle, then you don't have any area of resistance, right? Fine. The market then closed here. Let me zoom in. The market then closed here, right? So ideally, that's how you're going to mark it up. Where is that? Range, fresh POI, change it to this one. Gonna mark it up like that, and then you'd anticipate a seller from here, right? But what happens next? And this is the daily, right? We get a bearish candle right here. So this to me is another fresh area of resistance, right? It's an open close, right? So you mark it from the close of this candle. And then when price returns back, this is the daily. You then would want to anticipate getting a sell from here. Then price taps that area, and then where would you expect to target? Target the area that it's going to give you a bit of a problem when price is going to go low. In this case, you have an area of support. You'd assume that, okay, fine. At an area of support, price might bounce, right? So you'd want to manage your position with that in mind. So first target would be here, where you'd be managing your stops, right? Second target would be below this low, and then while following these other lower lows right here, while observing these areas here as well, right? Because you want to manage your position using these areas of support, and then price continues selling off. Can you see that? So that was just an example of where they form. So right now, I think what we could do, we could just do a small little back test, maybe, just to show you. We'll talk about the entries later. So just like here, we had this previous high, price traded above it, and then closed with a bearish candle, and then we created an area of resistance right here, right? Created an area of resistance right here. So if let's say for example, you are someone who uses swing highs, and then you say this is a swing high, we traded above it and then closed. So this is an area of resistance, but I don't prefer using this idea here, right? So let's look for another one. Stop hunt, then it closes here. And as you can see here, this one is not this bearish candle right here. This bearish candle has not engulfed this one, but it doesn't really matter, right? As long as you know where you're looking for it. But also keep in mind that the high time frame is important, right? The high time frame is also important, because right now I'm just marking it up, but I'll show you. So let's zoom in. There's something which I wanted to look at before we got far. Okay, fine. Let me do this. I'm gonna give you an example. Remember when we spoke about support areas, right? Fine, let's zoom in here. let's focus here actually. When we create an area of resistance, right, and then we trade above it aggressively, it means that this resistance has been broken. So it's resistance breaks becomes support, right? I want to show you an example, which is actually what happened 444, which was the reason for this up move, right? Although I do know that some brokers are going to be totally different with the chart feed, but it's totally fine. It's totally fine. So as you can see here, right? I'm gonna start afresh. As you can see here, we had this low, right? And then after that, what happened? We created a sell and then a buy. What does this create? It creates an area of support, right? Creates an area of support. I haven't checked the charts regarding what I'm showing you now, so I'm just seeing it right now. So after that, we created this area of support, right? We traded higher to break the structure, right? How do you check where the structure has been broken? Just use the line chart. Wherever there's a little bend right here, mark it up, bro. That's your break of structure. If you want to make it difficult and argue with the concept that I'm showing you, then it's all on you, bro. Like just keep it simple like that. Fine. After we broke the structure, we have two main areas actually, right? We actually have three. We have this first one right here. We have this second one right here, and then we have this third one right here, right? When you have areas like this where you could buy from, always choose the lowest two, right? Meaning that this one is no longer important. This one is going to be important because it's the first one that you are approaching, right? So, and then this other one is also going to be important because it's the lowest one. It's the last one that you're gonna have, right? Fine. Price then reacted from here, right? Two things that you could do. You could easily just place your entry right here with a 30 pip stop loss, right? And then risk it. That's the first thing that you could do. 30 pip stop loss, just like that. That's the first thing that you could do, right? That's the first thing that you could do, and then price continues to push higher. You'll obviously look for your targets. This was 600 pips, fine. And then the second thing that you could do, you could say, fine, price at this very important area, right? Price at this important area, which is the open close, right? Gonna mark it up like that. Just mark up your open close like that. When price was at this open close, it created a stop hunt, right? This is just you looking for confirmation, right? After the stop hunt, you wait, right? This the 4 hour open close. Let the 4 hour candle reject, right? Then after it rejects, what do you see? We have a sell and then a buy, right? Then you mark it up like that. This is your buy area. And then how do you take your entry? 30 pip stop loss, just like that. So let me just do this, bro. Inputs, risk. Where's that thing? Where's that thing? Where's that thing? Entry. Stop loss is going to be where? Let me just make it 75. I want it a bit closer to me. So 30 pip stop loss. And then you're in the trade, right? You're in the trade. And then price shoots high, right? That's basically the entry model that you would have used for this setup which happened here, right? But this video is not for entries. This video is for where to look for proper areas of support and resistance, right? Fine. The reason why we're here right now, the reason why we're here is because I want to show you how the RBS this also works, right? Where resistance breaks becomes support, right? And the opposite is true, whereas support breaks becomes resistance, right? Fine. So how does support breaks and becomes resistance? It's when you have a freshly made area of resistance or support, and then the following candle just traces through it and does not respect it in the position where it's supposed to be respected. So right here, right here, we have already came up with the idea that price is going to go high, right? Let's assume that. Then fine. Obviously, when price creates an area of resistance, you wouldn't want to be a seller when you're anticipating a buy. So after this move happens, it's confirming to you that price wants to keep going higher. So any area of resistance or any significant area of resistance which was formed prior to this candle is going to be an area of support, right? We had a buy and then a sell. It creates an area of resistance. We broke above that area of resistance, right? We broke above it, then it now becomes support, right? So before the engulfing, it was resistance, right? After the engulfing, it becomes support, right? Because we are no longer going to use it for as part of an area of resistance, right? So fine. This is our engulfing, by the way. So when we push it to the right, or when price later on comes back to this area, is going to be used as an area of support. Then the same thing applies, right? The same thing applies where you could either enter here, 30 pip stop loss, right? You can enter here, 30 pip stop loss, or wait for your entry, right? In this case, we had this area right here. We did not touch it. We had a sell and then a buy. So I'm not really sure if you would have used this one right here. I'm not really sure if you would have been comfortable with using this one. I'm not really sure. Open close. This one for me it's way too far for my liking, right? But this one right here, this one reacted from the open close, created an area of support. So ideally, the best trade would have been here, right? The most conservative trade would have been there. Get tip of stop loss and then a push high, right? A push high. So yeah, that's basically just about it, man. Really hope this video has been helpful, and hope you can use it in your trading. So I do know that my provision of the content is a bit slow, but I feel that it's going to make it a lot more easier for you to understand, right? A lot more easier for you to understand because you have a lot more time to go through one video and then the other one. So yeah. Anyway, let me not make this video long. I want to record another one and then I'll post it tomorrow. So tomorrow we'll be talking about how to project your trades. But although I'm making them separate videos, as you can see in the videos, I do show you where to target. I do show you how to place stops. So it's almost like an edification to whatever that I would have been explaining in the previous videos, right? Because everything has to be dedicated individually so that you can understand it alone, even while I do explain it in some parts of other videos. So yeah, man, with that said, let me see. Did I explain where to take trades using open close? I don't really remember. I don't really remember if I did, but let me just show you an example. I think I saw it on the daily. Saw it on the daily. Was it on the daily though? Yeah. This was the one. This was the one where we just had a stop hunt here. I was explaining how to choose these areas, but we're gonna talk about that one as well. So just the daily time frame. Sell, and then you observe your trade at the first area that you're going to encounter, right? Obviously it happened at the open close, then price sold off. So what could be happening now could be that we are approaching, we want to sell off from here, right? That could be the idea. Price could be looking to sell off from here. Why? Because we already used the open close, right? And then we created a high, which could be liquidity, right? So this could be our potential target, and if ever we are assuming that this is our potential target, then we would want to look for possible buys at these open closes. So since this is a new candle, this one just opened. If it closes bullish, then we're gonna look for buys from here. But if it closes bearish, then we're gonna look for buys from this area, this open close, right? Then yeah, fine. Let me not make it as a breakdown, but I'll record the breakdown alone, man. I'll record the breakdown alone. Yeah. Anyway, but that's talk to you on another one. Peace, love you, boys. I'm out.